Hello and welcome to another update video about ADA. So as already explained in the previous video, ADA had reached a target here, quite a strong rejection. Yeah, we only touched it, this level, this target box that I defined yesterday for you. We then moved down, but we stay in what I believe could become an ending diagonal for this wave 5. I'm still open to the idea that we can still go higher. In fact, at the moment, I would primarily still expect higher. The reason for that is I don't have an official signal that we're breaking down. Yeah, I think we would get that if we make it now below the previous low. That would be a really good signal that we are breaking down. I always try to warn against either taking profits too early or getting out of a trade too early or starting a short too early. A lot of people think if we reach target, it needs to go down, but as you can see there, the yellow support, the yellow target box stretches out all the way to 28.94 cents. So this can still go higher. The thing is, when you reach target, you often first of all get a reaction, but it can still push higher eventually. Those trends can continue. You know, those waves can extend out, they can stretch out. Even going higher now wouldn't even be an extension of a target. It could just be here a wave 1 and 2 in wave 5. So until we really get a signal, I would always be careful to suddenly, you know, get out of a trade completely. Taking partial profits always a good idea, or moving up a stop loss also a good idea. But reaching a target is really only fulfilling the minimum expectation. That is what many people don't understand. Sometimes they get frustrated if they leave a trade too early, if I give a target, but that is usually the minimum expectations. If you have an impulse or a trend, that can extend, that can carry on, you know. The market alone decides when that is over. And depending on the sentiment, these can sometimes extend out. And that's of course not predictable, because also the Elliott wave method only allows us to identify ideal target levels. But in addition to that, you know, you need to use other skills and methods to observe the chart then and watch for reversals and trend change signals. How can you identify that? For example, with making a lower low and a lower high, breaking a trend line. You can use two different moving averages. We discussed it in the last member live stream last Sunday. And there's different moving averages that you can use that indicate a trend reversal. Not really the one size fits all solution, but you know, that is just important to understand that when I formulate a target, doesn't mean we need to break down straight away. At the moment, I'm still open to the idea we go higher. And I think I said in the previous video, as long as we stay above the 78.6% retracement, which is round about the 27 cent level. So going below 27 cents would mean, first of all, that we most likely break below the white trend line here. And it would indicate that we're breaking below, yeah, a very important level, which is the 78.6% retracement. If that level fails in 90% of cases, 85 to 90% of cases, the trend is over and we're coming down. It would be coming down ideally into this support area, which is located between 25.5 and 26.5 cents. That's the B wave low. At the moment, I'm exploring here that this could become a larger corrective pattern. The reason is that, my opinion is that this is an impulse. So it's either something really bullish that could be a wave 1, yeah, or it is an A wave at the moment, because I believe that given the context, and context is very important when doing Elliott wave analysis, and of course to a degree subjective as well, but my view is the overall downtrend here on the daily chart is clearly still down. Therefore, I'm currently just exploring that what we are seeing here is only temporary upside, yeah, in a still larger downtrend, which could still get us to 18 cents and in the very worst case, in my opinion, to 10 cents. But that's quite a distance away and too early to talk about it really. Important to understand, yeah, ADA could have bottomed already. The bear market low could be in. It has done what it needs to do. But I need to see more evidence, yeah. That means we need to take it and follow it level by level. This is finally here the impulse we've been waiting for. We already assumed it would start here. That was only a 3-wave move. We then came down once more, but now we've got this impulse. And at the moment, I'm looking at this as an A wave, B wave down, and C wave up. Please understand that, as I said, ADA could have bottomed and the bear market low could be in. in that case, we would then be looking at a wave 4 down here and a wave 5, because this can also become a 1, 2, 3, 4, 5. And if we then come down in ABC, that would be a perfect entry, because then we have confirmation that, hey, on the daily, the trend might be changing. So that is the other way. So we're observing that. I'm observing that with interest. Currently assume it's only a 3-wave move up. There's no need to track it as a 1, 2, 3, 4, 5, because ABC gives you mainly the same targets anyway. Yeah, if it's an A wave or a wave 1, doesn't normally make a difference. If it's a B wave or a wave 2, doesn't normally make a difference. If it's a C wave or a wave 3, doesn't make a difference. The only difference would be the wave 3 can go higher easily than the 1.618 extension, whereas the C wave is limited by the 1.618 extension. That's the first signal where we can differentiate between something more bullish and yeah, the 3-wave move. That's it. Not much more to add. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.